U.S. lawmakers are moving with urgency as digital assets take center stage in Washington. A key development is the Clarity Act, introduced to address the growing regulatory ambiguity surrounding cryptocurrencies and related technologies. The bill is being pushed by Senator Cynthia Lummis, who warns that the U.S. risks falling behind in the global race for digital asset leadership if the legislation is not enacted soon. The Clarity Act proposes a clear division of regulatory responsibilities between two federal agencies: the Commodity Futures Trading Commission, CFTC, and the Securities and Exchange Commission, SEC. Most digital assets would be classified as digital commodities and fall under the CFTC's oversight, particularly for spot market activities. Tokens that resemble traditional investment contracts would remain under the SEC's jurisdiction. This framework aims to eliminate the confusion and regulatory overlap that has plagued the industry for years. Lummis argues that this legislative step is not just about regulating crypto, but about deciding whether the U.S. will lead in the new financial system or cede influence to other nations. The stakes are: most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Hi, as global competitors are already shaping their own digital asset frameworks. The U.S. could face long-term disadvantages if it continues to delay action. The bill's proposed structure seeks to provide clarity and stability for market participants, which could encourage innovation and investment in digital assets. By assigning clear regulatory roles, the bill aims to reduce the uncertainty that has discouraged institutional participation and stifled growth in the sector. However, the success of the Clarity Act hinges on its passage and implementation. The bill must navigate a complex political landscape, and opposition from other lawmakers or regulatory bodies could slow or even block its progress. The outcome will have significant implications for how digital assets are governed and traded in the U.S. The urgency behind the Clarity Act is driven by the belief that regulatory inaction could allow other countries to set the rules for digital assets, leaving the U.S. at a disadvantage. This is particularly concerning in a sector that is evolving rapidly and attracting global attention. The bill's proponents argue that it is a necessary step to maintain U.S. competitiveness in the digital economy. The proposed legislation also reflects a broader trend in digital asset governance. As more countries introduce regulatory frameworks for crypto, the U.S. is under pressure to act decisively. The Clarity Act is seen as a potential model for balancing innovation with oversight, and its success could influence regulatory approaches in other jurisdictions. The next signal to watch is whether the Clarity Act moves forward in the legislative process. If passed, it could reshape the U.S. digital asset. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Landscape and provide a clearer path for market participants. If not, the uncertainty surrounding digital asset regulation is likely to persist, affecting everything from investor confidence to technological development. In the meantime, the debate over how to regulate digital assets continues to evolve. The Clarity Act represents one approach to addressing the regulatory challenges in the sector. As lawmakers work to finalize the bill, the industry and market observers will be closely watching for any developments that could impact the future of digital asset governance in the U.S.